So let me just get rid of this. All right, I think what we'll do is because I had a question, right? I had a question from someone. He said to me, look, you know, I'm kind of new, you know, I've been in the market for probably a year, right? So during this bull run, and probably got you know, entered around this time, right? And what he said to me is, I don't really understand what to do now, right? You know, I've seen the conditions where everyone is targeting upside, but now I'm in conditions where I don't really understand it. I'm not, you know, a macro expert. You know, I'm just someone who's interested in the space. Done a little bit of, you know, TA, but essentially don't know what to be looking for at this moment, you know, during this sell-off. And the best way I could probably explain it currently is we look at, you know, this price action here that's ongoing. And the best thing I can say is let's go back in time and start to look at ranges, right? And ranges will become very important when, especially if you're focusing a higher time frame basis of when chop begins, we start to form ranges, right? So in these bullish conditions, we get essentially the vertical moves to the upside, right? But once conditions cool off and it's not as easy, we begin to build a range, right, which was here. So how do we identify range as it's forming, and you know, how can we trade a range? So let's go back to May. The first thing we look at in May, you know, we identify the sell-off that happened, very aggressive, right? What happens here after this happens, and this could be relevant to a lot of you now, you know, especially like if you've been in the market since that crash, where a lot of people got hit, this is going to be relevant to you, right? So this sell-off happened, and then what happens here is everyone becomes eager to try and earn back the money they've lost when they have no understanding of what's next, right? We start to get extremely emotional, you know, as humans. You know, if you've lost a lot of money and you don't know why, super aggressive. The next thing in your mind is, how can I get it back? And then this is where further mistakes begin to happen, right? So the first thing I'm going to do when we get a sell-off like this is begin to be patient and wait for levels to form. And after this sell-off, you know, we get the wick, you know, that's fine. You know, it was an aggressive sell-off. We get the wick, let's ignore that for now and look at candle closes. We simply just reject across here, right? So off the bat, we're now beginning to see likely our first resistance here. Can we take a position yet? No, because we don't know. You know, we don't have enough data yet to suggest, you know, where are we targeting? Can we go up? You know, there's just nothing to suggest we have to take a position yet, right? Arguably, you could take one on that 4-hour hammer candle here, but I wouldn't have done that, right? Because we're waiting for levels to form. Now, the sell-off from here, you know, we reject, and then we get this. So for me, this is now our level to go off of. We're ignoring the wicks for now. The wicks, you know, it's essentially noise, and what we're looking for is candle closes. So now we've had our first, you know, sign of a bottom here. So then we begin to say, okay, this is resistance, this is support. Why? Because we bounced back up to this area here. So now this is where we start to say, okay, we could be forming a range here. We know this is resistance. Can we look to take a position? And obviously the answer is yeah, right? We look to take a position up here. We'd scale in to a short. Obviously our target being to the low. Our stops, you know, above the price action here somewhere. Now, notice how we have this also here. So arguably, although you were scaling in here, if you didn't, you got a short entry on this position here. Why? Because it's almost like a head and shoulders pattern, right? Going into resistance. First rejection here, we reject at range highs. Okay, we bounce. Then we get this 4-hour hammer candle on the right shoulder. So even if you didn't want to take the risk of shorting the range high, absolutely you could have shorted here with a target of range low, right? And simply, where are we going to target? All we can go off is the level that was created previously, which was here, right? That's where we'd be targeting. And then that's the same place where we'd be looking to then build a swing to the range highs. Now, what you don't want to do is just close the position straight away, because you want to use it to hedge your P&L a little bit. So you would take some profits here. You would begin to also scale into a long at the same time. Begin to scale into this long. And then we would start to then close the rest of the short, probably once we saw some bullish price action, like this hammer candle here, right? Big buyback off the retest. All right, this looks like enough for me to close my short. Thanks for the profit. Now sit in my long, right? We didn't go any lower. Great, you know, we scale into our long here. We'd have bids layered. And that's fine, right? We took our short profits here. Now where are we going to target? Same thing again, right? Range highs. But the only thing now we have in our mind is the fact that we rejected here last time, right? So it makes it a little bit awkward. But we could just do the same again, right? Hold our long, begin to scale in short, and once we see some sort of signs of rejection, we fully close our long. And all right, we don't get fully filled. We probably get like half filled here, because we'd base it off this, and then potentially if it wants to squeeze higher, our extra 50% up here, right? But same again. And then where do we go? Range lows. So now on this point, the most important part about this is we've actually only taken, what, 2-3 trades here, and we've avoided all of this in the middle where people were essentially, you know, getting wrecked. You know, they were getting wrecked here. Yes, the stream will be saved. You know, essentially they were getting wrecked here. And this is probably the part where many of you were trying to trade this price action because you were desperate to earn back the money that you lost on the drop. And all this resulted in is you flip-flopping bias and getting chopped for your money, right? So that's the key part here, is we avoided the mid-range and we played the setups that made the most sense. Very patient, 1, 2, 3, right? So then obviously we target to the downside. Now what's notable here is that we've gone to now test this previous wick here. So now that could be telling us potentially that this is the new support, right? So we have to keep that in mind. Now where do you think from here we get long again? Let's bear in mind we'll still be sitting partially in our short down to here. Obviously we take profits here for the most part. Could have taken some off here, but you know, maybe, given that we've seen this wick. But where do you think we get long? If you have a response, just put it in the YouTube box or the Discord. I'll give it a minute. I just want to see what anyone's thought process is here on where we would get long after this drop. Okay, no one wants to brave it. For me, I would look at getting long. Yes. Okay, Gabriel. Yeah, great. On the reclaim, yeah. Exactly that. I forget YouTube has a little bit of a delay. Yeah, exactly that. You know, that is where I would say, all right, let's punt long. Back to range highs. Where's our invalidation? You know, potentially it's a little bit of a wide stop, but we could say under the lows, or we could just go say for like 2.5% under here, right? We close our short on that reclaim. So we say thank you for the 16% profit. So now, just simply playing ranges, we've made a trade of 18%, 16%, and arguably 16 to 18% depending on where you entered here, right? Sorry, let me make this cleaner. So we've got 16 to 18, 18, 16. Now we've entered again on this reclaim. Closed our short. Potentially you could hold the short. Potentially you could hold it and wait for confirmation of that move up, right? Once we get that bullish candle here, all right, we give away some percentage, but we also protect ourselves, right? That's what's important here, that we've also protected ourselves. So once this, you know, sets in play, then we could close our short. All right, we might lose 3%, 4%, 5%, but we've also protected ourselves for this move up. And again, where are we going to target, right? Range highs. So now we've entered again, got the full play to range highs, 25%. And not only that, whilst we're scaling in, we also got a very nice trigger to get short with the hammer candle, right? Because then range highs, hammer candle, stop above the hammer candle. Again, where are we going to target? We're debating now. Do we go to this support here again? Do we go lower? You know, are we now starting to show weakness that we're doing this? Potentially, right? But we have to also monitor the fact that we need to take profits. So for me, what would have happened here, and what did happen, is take a little bit off here, take a little bit off here, we dropped to here, didn't take any here, but once we closed on this hammer candle here, what that said to me is, okay, that's shown tremendous strength. We've reclaimed this support. We took out this wick here. So anyone that got long here in a position and just held it, like, you know, anything that was taken here and here and here is now taken out, right? So it's a fresh low. We close the support, and then potentially, you know, we can go long again. The issue is you stop under here, right? That's the issue, is that your stop's a little wide, but you could, you know, essentially take the risk on a short and then stop under here somewhere where you're going to target again range highs. But now this is where it gets interesting, right? So we don't get the same response now. The lows are getting lower on these moves down, and we're no longer getting that forceful move to the upside, right? And now this is where the trend changes, because now we're no longer getting to range highs. We're no longer getting to the range highs, and the trend begins to change. We start to make lower highs across the board, rejecting mid-range. And what this is here is essentially an area where we don't like to trade, because given what we've seen across here, it's an area where time after time you could never be sure on direction. You know, you never wanted to be taking a position along here because you wasn't sure on the direction, right? And now that's now became potentially our resistance. So what we do from here is start to monitor that the fact that this is extremely bearish. The bounces have got worse. all the way down. And what I want to show you here is why I'm not a trendline trader, because I remember this very clearly this day. Anyone that used a trend line on this day got bullish. And like this, when we replay, it looks bullish, right? The next candle made it look better as well. I'm not going to think, you know what I mean. The next candle made it look even more bullish. So then people were like, oh my God, we've broken this trend line. It's time to go range highs again. Why is that wrong? Because we have a huge resistance going along here. We've seen it in previous times that this was the mid-range. We're now proving that it wants to act as a resistance. So we could never go long here before flipping this, right? Why? What happened here? Deviation, deviation, horizontal resistance. So it's all good having it like this and it looking great and, you know, trendy. But anyone that traded based on this completely missed what was in front of them. So just take that in. Just take that in for a second, right? A trend line break doesn't necessarily mean anything, because you have to look at the bigger picture and what the price action is telling you. Yeah, we'll go over the hammer candle method. We will go over that after I've explained ranges. So just take that in, yeah, for a minute. Just soak that up. Let's get rid of that. And let's get back to the range, wherever it's gone. So now what we need to remember here is that these are positions as well. Let's remember that these are positions. So we've been stuck under here. This is thin air now, right? Complete thin air. We haven't been able to touch it since June. Complete thin air. Now let's remember these are positions, shorts. These are people selling. So all the way down here, these are people selling, right? All the way down, these highs, all right, fake out, whatever. But all the way down, these are lower highs and people's positions. And this is where it gets interesting. And you know, even myself, although I flipped bias once we started to make the trend change, which I'll explain now, this caught a lot of people off, because especially on the weekly, it looked horrendous, right? It looked absolutely horrendous. Looked like we was going to fall off a cliff. But where do you think we changed bias? You know, where did we start changing bias? And let's remember that these are positions. Break of the previous swing high, high. When we broke the line high. Correct. And it's not here. It's not here. It's not getting back above this yet, because we actually haven't done anything structurally, right? Where it is, and this is why we got this explosive move, right? And this is where, as a trader, even if you was in shorts from up here, as a trader, you had to be getting ready to cut. Because as soon as we move above here, we have to remember this is positions, and this is what initiates a short squeeze, right? These positions now start getting taken out. False to close. Right, they either get false to close, Right, shorts get forced to close, break even, liquidated, or, you know, it becomes a spiral, essentially, right? So as soon as we break this and we break that structure, we need to be very careful that this price action isn't just going to go, but you're gone, you're gone, you're gone, you're gone, right? All the way up. And that's exactly what happened, right? Why? Because we have a change in trend. And as soon as this trend changes, because, you know, we've been trending downwards essentially since June, but the lower highs started in June, right? On this structure. So since June, we've been trending down for a whole month. It's now time to take these positions out. As soon as we go like this, you can essentially just get long and at least be targeting here. And if you didn't want to, fine, but you absolutely had to be closing shorts. So I was shorting alts, right, from here, like from the entire of this range, I absolutely killed it. I was shorting alts. I was in so many alt shorts. I gave away so much P&L just on this move. But I cut as soon as we got to this area here, simply because I knew, or, you know, structure-wise, I'm in danger here. I could not give away any more P&L because nothing was telling me to be short anymore. So, okay, we gave away this, but that's fine because structurally, you know, it made sense to hold because we could have just gone like that, right? We don't know until we get that squeeze. So anyone that held shorts here, you have to look at that and say, okay, I was completely wrong, which is fine, but as long as you learn from it. And then that's what initiated, obviously, this next move up. But you see how just playing a range, avoiding, you know, the noise as much as possible plays a part, you know. Never taking a position here through the middle because it never gave us, you know, clear indication of what direction we want to go to, right? We played the 3-4 positions in this time and probably outperformed 98% of the market that got chopped. So now when we look at current price, and this isn't me saying that we're just going to form a range again, because we was just in a range, like, you know, we was just in a range for a fairly long time. From January, right? 3 months we was in a range up here. And we can look at that now. And let's look at the bigger picture. So then when we look at the price action that we've just had, which started in, I think, January, right? Yeah, January. We've got range highs here, mid-range here, and then it gets a little bit tricky identifying where are our range lows, right? Because we had this price action here and price action here, right? So we can argue, all right, there's a low down here, but for the most part, once we started getting here, this was what we could work off and assume that if we broke down, you know, we'd go and target these lows, which we did. But for the most part, this was, you know, a 3-month range. And there was a very important trigger of when to get bearish in this range. When do you think was the best time to get bearish if we was playing this area here as a range? Let's just say this for now. We'll count them as you know, that's a deviation. All right, you know, choppy PA, but we'll just count that one as a deviation. Where do you think was the best place to get bearish on the most recent range we had? Gabrielle says deviation above range high. And he's correct. So now why do you think that is, and it's very relevant, right? That we was stuck under this for 3 months straight. When you break structure that's been there for 3 months, you want to be seeing strength, right? You want to absolutely be seeing, we have been stuck under here for 3 months. I want to see this, or I want to see this, this, and this, right? Essentially. That's the type of price action you want to see from a range break of 3 months. Because that's not a short time. That's a very long time. So the fact that we didn't do this and go up, as soon as we fall back into this range, that tells you all you need to know, because a 3 month range break absolutely should not be getting back into it this easy. We wanted to see a trend to the upside. This sold us. Absolutely not. This is weak. As soon as we go back into here, your first thought should be, I'm going to target downside, you know, wherever it may be that you got in. My invalidation being that we flip back above this support, you know, reclaim the range high, and targeting as low as possible, whether it be 37.5. For me, it has to be even lower, because simply for the fact that we broke a 3 month range to the upside and could not hold it. That says to me pure weakness, no follow through, and the only alternative to that is to continue with weakness. So that's how, and especially if you're in the group, like I spoke about this a lot, if we did not hold this break, you target, you short everything. And that's exactly what, you know, that's exactly what worked. Don't hold this, signals a massive amount of weakness. You go short, and you short as much as you can to as low as possible. Now, do we feel like form another range? Because we could argue that what we're seeing here, is this now similar to the start of here? You know, is that what's happening here? Who knows, right? What we have to actually keep in mind is the macro side of things. Makes it very difficult right now. I generally believe these are probably some of the hardest conditions over the last 2 years. And it, you know, that's fine if you don't understand what's going on. That's fine. We can use TA perfectly fine, but you just have to actually respect the game and say, I need to be extremely patient, because there's not a lot of signals to me to take a position right now. Does everyone understand that, and understand why we get bearish here? Cool. All right. So now let's look at a trading strategy I like to use. And we can actually use one on BTC here. So if you followed me enough, you know I like hammer candles on the 4 hour, and you know I like to use RSI. When we look at this as a range, across here, this strategy actually caught a very nice short on BTC. Straight into mid-range. Bear div with the RSI. Hammer candle. Go short. Stop above. First target 37.5. Straight away we have located a setup to capture a majority of this downside. Now if you took this and you held on to it, you got a total of 40% down without even coming close to being stopped. And this is what's important about this strategy, is that we're happy to take, 2% stops, because often the upside is 5x that, at least. These are the type of setups that I like to take. I like to wait patiently, locate, some sort of hammer candle, and even here, like even to the upside. Even when we broke the thing, and I wouldn't have shorted this simply because it was a range break, right? So I wouldn't have shorted this because the bigger picture was that we just made a range break, but you could have, in line with the RSI battling at 50. So with the RSI above 50 bullish, below 50 bearish, right? For the most part, battling with the 50 RSI trend wise, hammer candle here. Could have shorted it. I wouldn't have because range high, the range break, but whatever. Don't short that because the range break, fine. We wait for a position. All of a sudden we get one at mid range that targets us to 40% downside, right? Now here's another one. Look how perfect this was on Sol. And let me just show you my chart for the bigger picture first. The plan, clearly, 130 to 140 area is a swing short with an invalidation of turning it into support. Flipping above this would signal a move, mid-range and range high. What did we get instead? All right, the daily gave a hammer candle, but let's look at it on the 4 hour, how clean this was. Hammer candle here, multiple bear divs. Get short, stop above. Look at the bigger picture. Where do we target? Straight away, our first target has to be, 100. So off the bat, as soon as we go into this position, we're looking at, 25, 30% just off the bat. Simply just from being patient and waiting for one trigger. And we didn't need to do anything after that. Like, you could literally have sat in that trade and just chilled out. Looking at the bigger picture, the trend of this coin, clearly negative. Clearly negative. Goes to retest a very key level here. Bearish retest on the 3 day. And then since then, coin is now down, dropped 75%. Currently down 65%. And you could say, actually, yeah, I was targeting this low. Why? Because if we lose this level, the only place for it to go next is essentially, all right, you could argue the 80 level, fine. But the bigger picture is the 50 level. And I understand that for a lot of people it's hard to get in that mindset of swing shorting. But the charts don't lie. The charts do not lie. And everything about this setup was super clean and super clear. There was, super respectful. Any questions? I'll wait for some questions first, just in case, and then I'll cover this one. Do you only trade? I mean, I don't only trade, but it's one of my... Would you enter those positions on the close of the hammer candle? Yes. You know, we wait for confirmation of the setup, and then we pull our trigger. How would I identify the TPs? I kind of covered that, but let me go over it. Simply because this is a higher time frame setup, right? We reject here. We look at price action that we've seen. You could argue that, is this going to now be a retest and back up? So our first TP is here, right? Second TP could potentially be here. Next TP based on this here is somewhere here, right? It doesn't always have to be accompanied by a div, no. It doesn't. But it helps. First price action, then indicators. This is what's important. You need to understand price action first, and then you know, incorporate the RSI. So I will never solely base a trade off the RSI, but I would solely base a trade off the price action. What I like is price action looks good, RSI accompanies that and gives me that double confluence, and that's what gives us that extra bit of confidence in the setup. But what you can never do is solely trade off an RSI. You've also got to look at the price action. What does the price action tell you? Does it actually tell you that it's looking to roll over? You know, because you don't want to just get caught in a bear div and then it continues to squeeze up. So price action, you know, is always a first, because what the candle's telling you is hey, I don't want to go. I don't want you above here. I don't want you above here. You know, go away. And then your invalidation is the buyer saying, well, fuck you, we're coming above. And it's the same as going into, you know, a support. Buyers are saying, look, you are not coming down here. We're not having it. Let's send it back up. You know. I prefer the 4 hour. I like the 4 hour. It can work on hourly as well. Like, it will work on all time frames, but the testing of it isn't there. Like, the lower time frame you go, the less reliable it is. Now let's look at one in regards to like FOMO, right? So at this time, a lot of people were, you know, struggling to get an entry on there. And this isn't the cleanest, but it is at the same time. If you were struggling to get an entry all the way up here and you was getting chopped, going in and out, simply it gave you one trigger before this big move. One trigger before this big move. And that was this candle here into the trend line. And again, I don't really use trend lines. Like, we could take the trend line out. It's not really relevant. But it gave you a hammer candle whilst the RSI perfectly bounced on the 50 level. So we got that hammer candle on here, 50 level bounced, that's enough for me to say, look, if I'm going to get an entry and this coin's super bullish, I think I'm going to try now. Super tight validation. Look at that. That's only a 1.5, 1.3% stop. Like, you can take that risk, right? Like, that's absolutely fine. We can take 10 of them. We don't care. But now look at the reward that came from taking that. Just a hammer candle on the 50 RSI on a coin that's bullish, and we wanted to try and get an entry and we couldn't. So we had finally got this trigger right at the end, right? Right at the end, we got a trigger just before it moved 80% in the space of 2 weeks. Just by simply being patient. Okay, we couldn't get in here. Whatever, the price action didn't let us in. Right? We didn't know where to enter and put a stop in. All of a sudden, we get a hammer candle in confluence with the 50 RSI to say, okay, I think this is worth the gamble. Let's go in. Super tight stop. Like, we're fine with that. And then all of a sudden, in a short space, even if you just wanted to go to here as TP1 and close, instantly it gave you a 13% move just from going in on that. Is there anything you don't understand now about the way that we trade the 4 hour? And again, you'll be able to watch this back. But it's really simple. Like, it's one of the most simple ways of trading. It just requires patience, which a lot of people don't have. And you see how price grinded up while RSI cooled off? That's when you know a coin's bullish. Price moving up, RSI going down. Defying the odds. Couldn't you apply these same strategies to other time frames? Potentially, but you know, as I said, and you can higher, but lower data becomes less reliable because it's a lower time frame. There's a lot more happening on a short basis, whereas 4 hour I think is a very nice time frame to do it. It's kind of right in the middle. Again, remember how I said you can't base your bias just off RSI. Just because there's a bear div doesn't necessarily mean it's bearish. Because price action continued to grind up with no breakdown whilst RSI kept saying it was thing. RSI is momentum, so it's trying to say that the momentum's dying, but quite clearly people are still interested in buying. That's why price action first. It's just that it just means that there's buyers there, right? That's as simple as that. It means that there's more buyers than sellers, and someone doesn't want this coin to drop. Someone is buying this coin. Market probably is trying to short it as the bear divs kick in, but there's more buy pressure. That's the simplest way to look at price going up, right? There's more buying than selling. Okay, yeah, let me show everyone the RSI. It's by Domenico something. Share it. Just posted it in the YouTube. It's free on TradingView. And again, just because it prints a red line doesn't mean that you should take a position either. It's very important that you monitor price action first. We never, ever, ever, ever take a position solely based off a bear div. It makes no sense. So someone asked, could we have entered here again? Yeah, potentially. Yeah. If you liked the hammer candle and you wanted to take the risk, then sure. But this one was the best one because it gave that peachy bounce on 50 just before the spring. That was basically telling us, look, I'm ready to spring through this resistance. It's in the chat. So now, is there anything people do not understand about this strategy? I haven't changed any of the settings, I don't think. It's probably just the colours. Can I show you another one? Where can I show you another? I think Atom done the same. Yep, it did. Actually, one did as well. So again, just before the big move. So excuse my dog. Just before the big move. The way to look at this is a range, mid-range. You know, at the time, Atom is a very choppy coin. I'll show two. I'll show Atom and one. So, very choppy coin in a range. Range high, range lows, mid-range. What we saw here is it actually starting to try and flip mid-range. So we got some consolidation in mid-range. Remember, these are 4-hour candles. So we was above for what, nearly 4, 8, you know, a day, just over a day of consolidation above mid-range. All of a sudden, 4-hour hammer candle in line with the RSI. Okay, we've just took out positions that maybe got bearish that we're going to go range lows. Shorts are now trapped, stop below, and I think we're ready to break up. Not as clean because Atom's a very choppy coin, but the thought process is still the same. Consolidated. Closed captions. I don't know if I can. So again, it's one of them ones you don't mind taking the risk because it's a tiny stop loss. Remember this, right? 1.5% stop loss. That's absolutely fine. Like, if you're uncomfortable with that, it's because you're over leveraged. Like, and I'm, this isn't a class where I'm going to teach you how to use your leverage, right? You need to be able to be risk managed as a trader. There's a million videos on YouTube. Like, that's your responsibility, right? I'm giving you a strategy here that if you're risk managed, this is, golden. Same thing was on one, actually, now that I think about it. Again, you could argue just a coin that was bullish, didn't give you an entry. Where can I enter? All right, let me take a punt on this hammer candle into the 50 RSI before we break out. And this, obviously this is bullish conditions, so when we get that under a key level, it's likely going to break up. What information can we get from the recent settings? Choose settings from the side. I don't have that, I don't think. For next time. Alright, yeah, because we're an hour in now. Yeah, I mean, I've showed you an example of where it works short in on sol. It works for both. There's an example here. Hammer candles, bear div, downside, right? And it's really good when it's on a, what you're looking for is it to do it on a support or a resistance, right? We want a liquidity sweep, knock back down and then go, or on a level, down, back up and go. You know what? I'm trying to remember if the top of BTC had on or not. I feel like it did on the free day. Oh no, it didn't. Do you always do this on the 4 hour? Pretty much. Yeah. 4 hours is my bread and butter. It's my favourite time frame. It's a happy medium, right? It's not too low and it's not too high. It allows us to intraday trade, find a position, but also we're not waiting days on end, right? Which you might not even get a trigger. What can I take from this price action that we potentially forming a range? Range highs here, range lows, yet to be determined. Is it going to be here and then eventually we're going to go and target lower or what, right? But for now, this is the range highs. That's the most we can go on what we have. It hasn't been enough time. Simply, if we start to squeeze above, then we start looking at bearish retesting on the bigger picture, right? So then when we look at the bigger picture, what are we looking at? And it's up here, right? 35 and 37. That's if we do get the impulse to the upside, right? So then that's the point where you're looking at this and then something like this, right? Back down. You know, that's what I would be looking for, because that would be a bearish retest. And then my bias would change simply if we started getting above, holding here and giving me as a signal to get long, because then that indicates to me a change in trend. Whereas on the bigger picture, when we look at it, for me, it's like we had this holding 3-day. You could argue you could have just gone like this on the 3-day, shorted, and got maximum downside. So another instance of, you know, potentially where you could have done it. I wouldn't have on this one because we didn't know if the trend was going to break yet, but just an example. But the bigger picture here is that we broke down from this, which was holding for a period of time, because we kept, what's important is that we kept getting buybacks above it. We had 3 buybacks to reclaim, and then we couldn't do it again. And as soon as we couldn't do it again, downtrend. So then from here, it's like the absolute ideal place to get short and feel comfortable is somewhere up here. That doesn't mean we're going to get it, because we're in very harsh conditions. I just feel like if we did get it, it would be very good, because then I'm looking for that. And that's that. You know, that's what you take from this price action. That there's nothing bullish about this price action. There's nothing bullish about this. You know, it doesn't matter if we bounce here. This, a bounce to there isn't bullish. What's bullish is reclaiming these levels and targeting back up to here. That's bullish. Doing this isn't bullish. It's a bounce. You know, it's the same way that dropping here wasn't bearish, because after that we did this. You know, a drop or a bounce doesn't indicate a trend. You've got to look at the bigger picture, and the bigger picture here is bearish. You know, and we can shop here for as long as we want. It really doesn't matter. What's going on, bro? So I think we've covered a fair bit. You know, you've now got a video on identifying ranges. You've got a strategy based on the 4-hour that you're free to use. Very simple, you know, providing you just understand the basics of support and resistance. You're able to use that. You know, you're able to go into a chart, identify the levels that you need to find on the 4-hour, and say, all right, I'm gonna wait for a setup, right? Yeah, it will be available. If there's any other questions, get them in. Otherwise, you know, we'll just wrap it up there. There's no need to confuse things. You know, the goal of this is to give you a simple strategy to incorporate in your trading. It's especially if you're new. You know, we want to keep it as simple as possible. Okay, yeah. Well, we'll leave it there. Obviously, if you have any questions or you want me to go over anything with you directly, then contact me. You know, if you feel like, you're still a little bit lost, that's fine. The VOD will be available. And yeah, just take care, everyone. Good educational material to study price action. Just crypto creds courses will do the basics.